And welcome back, Momentum Traders. It's the Alchemist here, and welcome to the Alchemy of Momentum and Speculation. And today we are going to have a lesson on candlestick chart patterns. Very popular indicators. I call them indicators, not just price data. They're actually indicators. And I use them in combination with stochastic RSI to give me very, very accurate signals. So this will be a series of candlestick chart patterns that I use. I have them on a flashcard. They were originally created by Steve Bigelow of Candlestick Forum, who unfortunately passed away in 2023. This is in his honor as well. I've received permission from Metastock to use these cards in this presentation. Thank you, Metastock, for that as well. A good shout out for Metastock. And let's begin with the first major signal for candlestick chart trading, and it is the doji. I'm going to read my notes to you as you take a look and memorize this chart pattern. First, the criteria. The open and close are the same or nearly the same, as you see here in this illustration. The length of the shadow should not be excessively long, especially when viewed at the end of a bullish trend. Signal enhancements. A gap away from the previous day close sets up for a stronger reversal move. So in stocks, we have gap openings, negative or positive openings almost daily. In 24-hour markets like crypto or altcoin trading, you may not have a gap. I use gaps as signals. One of the first things I had to really adjust to in trading cryptocurrency versus futures or stocks is the 24-hour nature of the data points and how it relates to the printing of the candlesticks. Remember, candlesticks are a psychology indicator. We use a lot of behavioral finance here at Alchemy of Momentum and Speculation, and the candlestick indicators are perfect contribution to that analysis. Large volume on a signal day increases the chance of a blow-off day has occurred, although it is not a necessity. It is more effective after a long candle body, usually an exaggerated daily move compared to a normal daily range seen in the majority of the trend. If you recall, Jesse Livermore had a saying, the stock has to act right. When you're looking at your trading vehicle, if it's a stock or a cryptocurrency, you also want to take a look at the historical price behavior. Does it behave like a momentum stock or a highly volatile swing trading stock or a cryptocurrency play? You want to take those things into account. Bullish engulfing. You'll hear a lot of people, a lot of the public traders, retail traders, professional traders know this signal very, very well. The bullish engulfing. Let me read to you what the criteria are. The body of the second day completely engulfs the body of the first day. So you see here, I have in the signal, the engulfing white candle here. Shadows are not a consideration. Don't count the shadows. Look at the body of the candle. Prices have been in a definable downtrend, even if it's been a short-term one. So you can get a bullish engulfing on just a pullback, a 3 or 4 day pullback. You might get a bullish engulfing pattern, and that will be the signal to strongly take your entry signal, especially if it's confirmed by volume. The body of the second candle is the opposite color of the first candle being the color of the previous trend. The exception to this rule is when the engulfing body is a doji or extremely small body. Here's what enhances this signal. A large body engulfing a small body. The previous day was showing the trend was running out of steam. The large body shows that the new direction has started with good force. Momentum. A collection of velocity equals momentum. A large body engulfing a small body. These are signal enhancements. The previous day was showing the trend was running out of steam. The large body shows the new direction and has started with good force. When the engulfing pattern occurs after a fast move down, there will be less supply of stock to slow down the reversal move. A fast move makes a stock price overextend and increases the potential for profit taking, or mean reversions. Depending on what you call it, how you label it, it's the same thing, mean reversion. Large volume on engulfing day increases the chance of a blow-off day has occurred. So these are reversal signals that we're looking for. Let's move on. Bearish engulfing. Now this is the exact opposite of previous. The criteria of the second day completely engulfs the body of the first day. Shadows are not a consideration. Prices have been in a definable uptrend, even if it has been a short term. You see the previous uptrend in our illustration here is illustrated by 3 vertical lines before the body of the candles. That's how you know what the direction of the previous trend was. The body of the second candle is the opposite color of the first candle being the color of the previous trend. The exception to this rule is when the engulfing body is a doji or extremely small body. Haven't seen a lot of those, so that's worth noting. Signal enhancements. A large body engulfing a small body. The previous day was showing the trend was running out of steam. The large body shows the new direction has started with good force. When the engulfing pattern occurs after a fast spike up, there will be less supply of stock to slow down the reversal move. So what you're going to get? Covering. And this is where the behavioral finance fear of loss really sets in on this signal. This is a behavioral finance signal, illustrated through candlestick pattern. When the engulfing pattern occurs after a fast spike up, there will be less supply of stock to slow down the reversal move. A fast move makes the stock price overextend and increases the potential for profit taking in a meaningful pullback. Large volume on engulfing day increases the chance of a blow-off day has occurred. These are major signals that we look for. Let's move on. Hammers. This is one of the most effective trade execution signals that I follow. Typically occurs at a major support or resistant levels. I'll read the criteria, then the enhancements. The body of the second day completely hammers. The criteria, the lower shadow should be at least 2 times the length of the body. I'll repeat that. The lower shadow should be at least 2 times the length of the body. And that's what we have here. 2, the real body is at the upper end of the trading range. Great. The color of the body is not important, although a white body should have a slightly more bullish implications. So you can have a black bearish hammer at the bottom of a reversal, and this is where we're going to get our velocity cycle starts. Your absolute momentum lows occurs with hammers quite frequently. There should be no upper shadow or very small upper shadow. In this illustration, there's no upper shadows here. The following day needs to confirm the hammer signal with a strong bullish day. Wait for confirmation. And confirmation includes the next day price opening, volume, and your momentum oscillators. Signal enhancements. The longer the lower shadow, the higher the potential of a reversal occurring. That's why you want it at least twice the size of the body. A gap down from the previous day close sets up for a stronger reversal move, provided the day after the hammer signal opens higher. So remember, our confirmation on our trade executions is a positive open on the next open and a follow through. Here are our signal enhancements. The longer the lower shadow, the higher the potential reversal occurring. Two, a gap down from the previous day close sets up for a stronger reversal move, provided the day after the hammer signal opens higher. Larger volume on the hammer day increases the chance of a blow-off day has occurred. Very, very powerful signal. My most powerful trade executions will occur within 4 bars. So you have to really focus on these short-term signals from your candlesticks. Hanging man. The criteria for a hanging man. The lower shadow should be at least 2 times the length of the body. The real body is at the upper end of the trading range. The color of the body is not important, although a black body should have a slightly more bearish implication. There should be no upper shadow or a very small upper shadow. This is a hanging man. Fourth, the following day needs to confirm the hanging man signal with a black candle, or better yet, a gap down with a lower close. So that would almost be an island reversal in traditional charting. Signal enhancements. The longer the lower shadow, the higher the potential of a reversal occurring. The gap up from the previous day's close sets up for a stronger reversal move, provided the day after the hanging man signals it trades lower. Large volume on the signal day increases the chances that a blow-off day has occurred, although is not a necessity. Hanging mans, again, occur quite often at resistance levels or at the end of wave 3, or what other criteria you have. Hanging man is a very common trade execution signal. Let's move on. Piercing pattern. These are very, very difficult to catch in action, because you'll have other psychology in effect while this piercing pattern takes hold. You have to be very disciplined about your self-awareness while you're trading, and candlestick patterns can help you with that task. But you need to learn these very crucial major signals. Piercing pattern is one of them. Here's the criteria. The body of the first candle is black. You notice that here. The body of the second candle is white, as illustrated. The downtrend has been evident for a good period. A long black candle occurs at the end of the trend. The second day opens lower than the trading of the prior day. Notice the gap down difference in this piercing signal? The gap down is exhaustion, and it's probably occurring with your momentum oscillator in full force down, slamming into support. The white candle closes up more than halfway up the black candle. Signal enhancements. The longer the black candle and the white candle, the more forceful the reversal. That means everyone's wrong-footed, and the stops are being taken out, and the conforming biases are pressing their longs. The greater the gap down from the previous day's close, the more pronounced the reversal. The higher the white candle closes into the black candle, the stronger the reversal. Large volume during these 2 trading days is a significant confirmation. I like 3 confirmations. Well, yeah, your candlestick piercing pattern, your actual volume, and your momentum oscillator should be confirming. Let's move on. Dark cloud cover. Now you notice that's very simple. That's just the reverse of the piercing. You notice the gap up, and the bills weren't able to hold the high, and they gave the high up and then the open, and then closed into the body of the previous white candle. Dark cloud cover. I wouldn't rely on this 100%. Always, always, always wait for the confirmation when you use candlestick patterns. Let's go into the criteria. The body of the first candle is white. The body of the second candle is black, as illustrated here. The uptrend has been evident for a good period, as the previous three vertical lines illustrate. A long white candle occurs at the top of the trend. Third, the second day opens higher than the trading of the prior day. And the fourth criteria, the black candle closes more than halfway down the white candle. Closer it is to the open of the previous, the more of a reversal signal this is. Signal enhancements. The longer the white candle and the black candle, the more forceful the reversal. The higher the gap up from the previous day's close, the more pronounced the reversal. The lower the black candle closes into the white candle, the stronger the reversal. Large volume during these two trading days is a significant confirmation. Here again, look at your time and price analysis, your projections, and your momentum oscillators will confirm this signal. Most of these signals I use for my exits. I find that I exit at extremely precise points because I have these candlestick patterns memorized. Okay, let's move on. Harami, bullish Harami. I like this one. Here's the criteria. The body of the first candle is black. The body of the second candle is white. Criteria number 2, the downtrend has been evident for a good period. A long black candle occurs at the end of the trend. Most likely our absolute momentum low that we look for. This sets our volatility cycle. I'll be teaching that with Bollinger Bands in another series. Third, the second day opens higher than the close of the previous day and the close is lower than the open of the prior day. Fourth, unlike the Western inside day, just the body needs to remain in the previous day's body, whereas the inside day requires both the body and the shadows to remain inside the previous day's body. There's your distinction between Western charting and the Japanese candlesticks. For a reversal signal, further confirmation is required to indicate the trend is now moving up. Again, time price analysis projections, support and resistance, momentum oscillators are moving up with the signal. Signal enhancements. The longer the black candle and the white candle, the more forceful the reversal. The higher the white candle closes up on the black candle, the more convincing that a reversal has occurred despite the size of the white candle. It's a great signal, no doubt about it. Haramis, bullish haramis, I love them. Let's move on. Bearish harami. Criteria. The body of the first candle is white. The body of the second candle is black, as illustrated here. The uptrend has been apparent. A long white candle occurs at the end of the trend, as illustrated here by the two vertical lines prior to the white candle. That's your previous uptrend. Third, the second day opens lower than the close of the previous day and closes higher than the open of the prior day. Yep, negative open. Bears were able to keep prices down the entire session, if not lower. For a reversal signal, confirmation is needed. The next day should show weakness. Absolutely. Oscillators, time price projections, support and resistance levels. Signal enhancements. The longer the white candle and the black candle, the more forceful the reversal. The lower the black candle closes down on the white candle, the more convincing that a reversal has occurred, despite the size of the black candle. You really have to pay attention to these signals. If you blink, you'll miss it. And this is where the least risk, the most upside exists in the whole entire trade. Even if you're wrong, you'll lose less. You might break even. Okay, let's go to the next. Beautiful. Morning Star. Oh, when I first learned these flashcards, this was my favorite because I saw this pattern frequently all through the 2000s, 2010s, the 20s. I mean, this is just a very, very common reversal pattern that you should memorize visually and behavioral science wise. Morning Star, the criteria. First one, the downtrend has been apparent, as we see from the three vertical lines prior to the black bar. The body of the first candle is black, continuing the current trend. The second candle is an indecision formation. The third day shows evidence that the bulls have stepped in, that the candle should close at least halfway up the black candle. And that's what we have illustrated here. We'll call it 5/8 closed up. But you see that it's a morning star pattern with that small body in the middle of that. Signal enhancements. The longer the black candle and the white candle, the more forceful the reversal. That's been a common theme lately. Have you noticed it? The more indecision that a star day illustrates, the better probabilities that a reversal will occur. I.e., after you see that little star, if you have a gap up positive opening and the bulls maintain the pressure all day, that's a good signal that a reversal has occurred. I almost guarantee your oscillator has turned with it. A gap between the first day and the second day adds to the probability that a reversal is occurring. A gap before and after the star day is even more desirable. The magnitude that the third day comes up into the black candle of the first day indicates the strength of the reversal. You know, this starts to become common sense to you as you learn these patterns and you have behavioral finance in the background. These are psychological indicators. I know they're price data points and you may overlook them and look immediately at your momentum and your support and resistance, but candlestick charts are indicators. It's an indicator, so you have to use it as such. It's a psychological indicator, in fact. Evening Star. I see this when you have complicated tops. You know, usually your lows come in with an absolute momentum low. One spike down, and then it'll be a second attempt. That's our W pattern. It resets our volatility cycle in the Bollinger Bands. But on tops, they tend to be a little more violent and unpredictable. And these evening star patterns will show up on pump 1, pump 2, or pump 3 of that top. These kind of patterns appear. So let's go over the criteria. There are 3. The uptrend has been apparent. 2, the body of the first candle is white, continuing the current trend. The second candle is an indecision formation. Thirdly, the third day shows evidence that the bears have stepped in, that the candle should close at least halfway down the white candle. Well, I would even say not only did they step in, but they took control of the market here, at least for 24 hours. Signal enhancements. The longer the white candle and the black candle, the more forceful the reversal. The more indecision that the star day illustrates, if it's a doji star or small body, doji star is more powerful than a small body. The more indecision the star day illustrates, the better probabilities that the reversal will occur. Thirdly, a gap between the first day and the second day adds to the probability that a reversal is occurring. Fourthly, a gap before and after the star day, is even more desirable. The magnitude that the third day comes down into the white candle of the first day indicates the strength of the reversal. So the openings of the next day are vitally important to candlestick traders. It says who's in control of the market. immediately, whether it's the bulls or the bears. And we also immediately know the order flow. How many times have you made a trade, got into position, but you were early? You were out of step with the order flow, you got stopped out, and then it went on and proved you right. You were out of step with the order flow. The candlestick patterns could have helped you with that. Okay, that was Evening Star. Okay, so kickers. Here are, and this is a major signal. I like kickers, but you know, it's only good for like one bar, so you better really confirm this trade. But here are the criteria for kickers. It's a very powerful signal. The first day open and the second day open are the same. The price movement is the opposite direction from the opening price. The trend has no relevance in the kicker situation. The signal is usually formed by surprise news before or after market hours. Earnings revisions are notorious for kickers. Notorious. Fourth, the price never retraces into the previous day's trading range. Enhancements. The longer the candles, the more dramatic the price reversal. Opening from yesterday's close to yesterday's open already is a gap. However, gapping away from the previous day's open further enhances the reversal. You're going to have to really study this one. And then you have to find examples in your charts and you'll say, oh my gosh, I've been missing these signals. But I typically find it on earnings announcements or some information shock to the system is usually when this occurs. Shooting star. This is very common. You see it at major tops. You know, remember, Marcus tops are complex and very, very confusing to traders. So you need these type of psychological signals, but again, wait for confirmation. So here we go. The criteria. The upper shadow should be at least 2 times the size of the length of the body. 2, the real body is at the lower end of the trading range. The color of the body is not important, although a block body should have slightly more bearish implications. Maybe that gives the trade a little more weight. There should be no lower shadow or a very small lower shadow. The following day needs to confirm the shooting star signal with a black candle, or better yet, a gap down with a lower close. I like the gap down with the lower close because now you have an island reversal. Signal enhancements. 1, the longer the upper shadow, the higher the potential of a reversal occurring. 2, a gap up from the previous day's close sets up for a strong reversal move, provided the day after the shooting star signal opens lower. Confirmation of next day's open. 4th, the following day needs to confirm the shooting star signal with a black candle, or better yet, a gap down with a lower close. Enhancements. The longer the upper shadow, the higher the potential of reversal occurring. A gap up from the previous day's close sets up for a stronger reversal move, provided the day after the shooting star signal opens lower. Large volume on shooting star day increases the chances that a blow-off day has occurred, although it's not necessary. That's your shooting star. And lastly, for this series is the inverted hammer. I'm sure you've seen this price pattern if you use traditional candlesticks. You may not if you do not use the traditional candlesticks, by the way. The cloud type of candles, I find they did not really work well with my momentum indicators. So I like to use the traditional candlesticks. So let's go over the inverted hammers. Criteria. Number 1, the upper shadow should be at least 2 times the length of the body. We have that here. The real body is at the lower end of the trading range for the day. The color of the body is not important, although a white body should have slightly more bullish implications. There should be no lower shadow or a very small lower shadow. There's none in this illustration. The following day needs to confirm the inverted hammer signal with a strong bullish day, and with volume, and with their momentum oscillators. Signal enhancements: the longer the upper shadow, the higher the potential of a reversal occurring. 2, a gap down from the previous day's close sets up for a strong or stronger reversal move, provided the day after the inverted hammer signal opens higher. Again, wait for the opening of the next day to see if the bulls are stepping in or if the bear is going to regain control. Thirdly, a large volume on the signal day increases the chances of a blow-off day has occurred. So that'll be the final for our first episode of these candlestick patterns. There's 45 of these. We just went through 14. You'll have to review this video several times to get these charts, but I guarantee you it'll be well worth your time. So in any case, stay true to your trading, momentum traders. Stay present, and we'll see you in episode number 2 for the candlesticks. Thank you.